Hey guys, Tony Denaro here. A very quick video for you recapping the AMC Q2 2023 earnings and a quick review of how my model did against the actual results and what learnings we got from that. Let's get right into it. And then join me tonight, 8:30 Central, 9:30 Eastern, for a live stream where we will be doing live Q&A. Look forward to seeing you on that. If you have not already heard, AMC grew revenue by 15.6% to $1.347 billion. Net income was a positive $8.6 million, blowing away analysts who had been forecasting a loss for AMC in Q2. No surprise here, we've been calling for a positive earnings for over a month for Q2. We just didn't know exactly where it was going to come in. Diluted earnings per share came in at 1 penny, positive 0.01. Adjusted EBITDA improved by $75.8 million to $182.5 million. Net cash used in operating activities improved by $63 million to $13.4 million. And available liquidity at the end of June was $643 million, including the $208 million from the revolving credit facility, leaving the company down about $65 million or so in cash from last quarter, now having about $435 million left on the balance sheet in cash. And that's something we're going to wrap up this quick video with, talking about cash on the balance sheet. Let's go into, though, my spreadsheet, see how I did on the forecast a month ago against the actuals that were released in pre-market today. Here is the model, and if you remember from the video a month ago at the 2-minute mark, I spent a good 30 seconds or so telling you guys that we were estimating the percentage that AMC got of the total box office, and I walk through with you how that has been varying between 31 and 28%. You can see those numbers here over previous quarters. And that since the most recent ones were 31%, that I was going to input that number into the model so that we could see how that would look. As it turns out, though, when we look at the actual numbers that came in for Q2, it was back down to 28%. So it was too optimistic to use 31%. The whole point of the model is to track previous results, take the learnings from that, and use them to help gauge what to expect in the future. So that is a learning. We know that we can't always expect things to be 31%, 28%, to 31%. We'll start talking in future videos about a variance between those two so that we have some goalposts. We know best case and worst case scenario where we're going to come in. Food and beverage was up from the model, 65% actual for Q2 versus 61% that I had estimated. Other theater came in a little bit lower, 15.5% versus 17%. Film exhibition costs were pretty close. 51% was what AMC spent versus my estimate of 47% based on previous quarterly results. Food and beverage costs came in exactly what we were expecting, 18.7%. Net, we came in at 0.01 cents, as we mentioned at the beginning of this video. This number, 0.07, was a very high-end forecast if, as I said a month ago, AMC was able to capture 31% of the total domestic box office, and we did not do that. That is why we have the difference in the model. 2 quarters ago, we nailed the earnings, both in revenue and earnings per share, to the dollar and to the penny. This quarter, we're off a little bit. That happens with models. We take the learnings and we adjust. Hopefully next quarter, it'll be a little more accurate. Now let's talk about that balance sheet, because this is the key concern that I have and the reason AMC did not go up based on the news of positive earnings today. AMC's cash is down now from $495 million to $435 million. We have current assets of $707 million with current liabilities of $1.54 billion. That gives AMC a negative working capital of $800 million. This is what Wall Street is worried about. This is why the shorts are happy right now. And this is why AMC needs to raise money. They have negative $800 million to pay their bills that are coming due in the next 12 months. And I'm going to keep hammering that home despite all the clickbaiters and the pumpers that don't want to talk about the finances or tell you that bankruptcy is off the table. Guys, black and white, SEC, accounting, audited documents. You cannot ignore the financial statements. If you prefer to listen to the clickbaiters because it makes you happy, hey, I totally get it. But we are working off the financial statements, and I'm going to keep hammering this home so that when and if things don't work out, as the clickbaiters are telling you, you understand why. Corporate borrowings currently sitting at $4.79 billion, just under $5 billion, but a reduction from the December 31st, $5.1 billion. And we noticed that in the conference call today, Adam Aron did not mention paying off the debt when he was asked what he would do with the cash. As far as that debt goes, once there is cash on the balance sheet, the working capital ratio is fixed. Adam can go refinance that debt, get better terms, push it out further, and wait until the movie industry is recovered enough to start taking a real whack at that debt. That is what I got for you today on the Q2 earnings. Again, it beat analyst expectations. Positive 1 cent per share. However, I do think that AMC's price is going to continue to be pinned as long as the lawsuit settlement is being held up by the objectors in court. Stay tuned for Judge Zern's decision. Will she allow AMC to raise cash, or will the company continue to have its cash whittled down quarter by quarter until bankruptcy is something that they have to consider? Let's hope it is not the second option. I am Tony Denaro. I will see you on the next video. Join us on the live tonight.